If you're looking for an easy way to invest in Indian-based stocks and companies through one simple ETF, then you're in the right place. In this video, we're going to review the iShares India 50 ETF, which is an ETF that invests in 50 of the largest Indian-based stocks through a single fund. Now, the fund is offered by BlackRock as part of their iShares ETF lineup. For those of you that are not familiar with BlackRock, they are the largest asset manager in the world, and as of the end of Q2 2021, their AUM sat at $9.496 trillion. Wow. I actually did some digging, surprise, surprise, and found out that there are currently 388 different ETFs that BlackRock offers, and the iShares India 50 ETF is one of those 388 ETFs. And buying this ETF, like all ETFs, is super simple. All you have to do is go to your Robinhood or your TD Ameritrade or any other broker that you use and simply type in INDY, and boom, you just invested in 51 of the largest companies in India. In this video, we're gonna do a full review on the iShares India 50 ETF. We're gonna talk about what it is, we'll talk about what companies you'll be investing in, we'll talk about who this ETF is for, we'll talk about how this ETF works, and we'll talk about a bunch of other things that will help you make an informed decision of whether or not to invest in the iShares India 50 ETF. All I ask of you is to tune in until the very end of this video, because I'm going to be dropping some serious knowledge that all of you will find extremely helpful. And if you could do me a quick favor and hit that thumbs up button so that this video is recommended to others, and please consider subscribing, because I'm making content like this all the time that is intended to increase your knowledge and help you out financially. To get a better understanding of what the iShares India 50 ETF is, let's quickly talk about what an ETF is. Now, I know that some of you watching may be new to ETF investing, so I'll explain what an ETF is in approximately 30 seconds. An ETF, or an exchange-traded fund, is a basket of different stocks or bonds that usually tracks an investment theme or an investment index. Now, an ETF trades just like a stock. You can buy 1 shares of an ETF, or you can buy 10,000 shares of an ETF. To get a better understanding of what an ETF is, let's compare it to a stock. Now, let's use a random company stock that people know about. Let's go with Wells Fargo. Now, currently, Wells Fargo trades at around $50 a share. Now, if I were to buy 1 share of Wells Fargo is the only company that I'd be buying. Now, let's take a look at the iShares India 50 ETF, which also trades at around $50 a share, $48.20 to be exact. But when you buy 1 share for $48, you aren't buying one company. That $48 is actually investing into 51 of the largest companies in India. Now, which companies does the iShares India 50 ETF invest in? Well, ladies and gentlemen, that's what we'll cover in the following sections. In this section, I want to go over some key details of the iShares India 50 ETF. The fund trades under ticker symbol INDY. It has a year-to-date return as of December 30th, 2021 of 18.53%. It has an expense ratio of 0.9%, and we'll talk about the performance of this fund and its expense ratio in greater detail later on in this video. Moving on with more key details. So net assets in the fund as of December 31st, 2021 are just over $683 million. The fund is traded on the NASDAQ exchange. The fund is benchmarked against the Nifty 50 index, and the fund has an inception date of November 18th, 2009. So it's not like this fund is new, it's been around for over 11 years. And the last key detail that I want to share with you all is the number of holdings. As of December 31st, 2021, this fund has 51 holdings. Now, you heard me just mention that this fund is benchmarked to the Nifty 50 index. Now, many of you may have never heard of the Nifty 50 index, and if you're unfamiliar with it, it is one of 2 main stock indices used in India, and the other one is the BSE Sensex. You can think of the Nifty 50 like we think of the S&P 500 here in the United States. Now, the S&P 500 is composed of the 500 largest companies in the United States, and the Nifty 50 is composed of the 50 largest companies in India. And much like you can buy an S&P 500 index fund ETF like VOO or SPY, which track the S&P 500, this product from BlackRock called the iShares India 50 ETF tracks the Nifty 50 index by holding the same companies that are in the index. As I mentioned earlier, this fund has 51 holdings, and in this section of the video, I want to talk about the top holdings as well as the portfolio allocation of each one of these holdings. Now, if we look at the fact sheet of the iShares India 50 ETF, you'll see that it lists out the top 13 holdings within the fund, but this fact sheet is slightly outdated because it's from September 30th, 2021. I actually found a more up-to-date holding list as of December 31st, 2021, and here it is. Now, as you can see from the following list, the top holdings in this fund are Reliance Industries at 10.74%, Infosys at 9.21%, we have HDFC Bank at 8.52%, we have ICICI Bank at 6.75%, we have Housing Development Finance Corporation at 6.15%, Tata Consultancy at 5.09%, we have Kotak Mahindra at 3.46%, Larsen & Toubro at 3.01%, we have Hindustan Unilever at 2.77%, and ITC Limited at 2.51%. Now, it's important to understand that each one of these companies has a different weighting within the fund. Now, what I mean by that is when you buy one share of the iShares India 50 ETF, which trades at around $48, that $48 is not equally distributed to all 51 companies. Now, as you can see, Reliance Industries, which is in the energy sector, has a 10.74% weight in the fund. Let's take ICICI Bank, has a 6.75% weight in the fund. Tata Consultancy has a 5.09% weight in the fund. And as you go down and down, every single company has less and less weight within the fund. All right, so now let's talk about the fund's expense ratio, which is 0.9%. And to sum up what the expense ratio means, it's pretty much what you pay BlackRock to manage this fund on an annual basis. Like I said, BlackRock manages this fund, and what I mean by that is that they rebalance this fund, they change the allocations of what stocks this fund invests in, they have a team of analysts and a portfolio manager that research and manage the day-to-day activity of this fund, and they do the marketing for this fund, they distribute dividends, they do the taxes, and they manage the currency risk of this portfolio. And in return, they ask for a 0.90 or 90 basis point fee. So what does a 0.9% expense ratio look like in real life? Well, if you invest $1,000, you'll be paying BlackRock an annual management fee of $9. If you invest $10,000 into this fund, you'll be paying them an annual management fee of $90. If you invest $100,000 into this fund, you'll be paying BlackRock an annual management fee of $900. And if you invest a whopping $1 million, you'll be paying BlackRock $9,000 per year to manage this fund. And if you're a naturally curious person like me and want to get a rough idea of what BlackRock is making in terms of revenue on this fund, all you have to do is take the assets under management, which currently stand at around $683 million, and multiply it by 0.9%, which gives you $6.14 million. So in case you're curious what BlackRock is making in terms of revenue, it's roughly $6.14 million a year on this ETF. And a 0.90% expense ratio seems high, but it's pretty much industry standard for this type of ETF product. Now, I've looked and researched all of this fund's competitors, and their fees are in the same range. And at the end of the day, this fund is a unique product offering that requires a lot of operational resources, as opposed to a super cheap S&P 500 index fund that has an expense ratio as low as 0.03%. In this section of the video, I want to take a look at the performance of the iShares India 50 ETF. As of September 30th, 2021, we have a 1-year total return of 49.1%, a 3-year return of 15.06%, a 5-year return of 12.11%, a 10-year total return of 8.87%, and lastly, we have a total return since inception of 6.79%. To get a better idea of what this means, let's take a look at this hypothetical chart. Now, this chart shows the growth of a hypothetical $10,000 had you invested that $10,000 on the fund's inception date back on November 18th, 2009. And as you can see, from November 18th, 2009 to December 31st, 2021, this fund returned 115%, and that $10,000 is now worth $21,499.52. Now, during that same period of time, the Nifty 50 index returned 147%, and that same $10,000 would now be worth $24,700.53. Now, the reason that I like this fund is because India is a growth market and it has the potential to be one of the fastest growing large economies in the world. And due to the fact that this fund tracks the Nifty 50 index, this fund should reflect that anticipated growth. And to be quite honest with you, I've done a lot of research on Indian ETFs that are available for purchase in the United States, and this ETF has outperformed all other ETFs that track the Indian market except one. And I firmly believe that it will continue to outperform its competitors over the short and long term. In this section of the video, I want to talk about why you should invest in the iShares India 50 ETF. Now, in my opinion, there are two main reasons that you should invest in this fund. And the first reason that you should invest in this fund is because of the diversification that it offers. As we talked about earlier, you can buy this ETF just like you buy a stock. And when you buy this ETF, you get exposure to 51 of the largest companies in India. And you are not only getting stock diversification by investing in this fund, you are also getting sector diversification. And as you can see from this chart, 37% of this fund is allocated to the financial sector, 17% is allocated to information technology, 12.75% to energy, 7.97% to consumer staples, and the list goes on with all of the different sectors that this fund has exposure to. And the second reason that you want to buy this fund is if you are bullish on the growth potential of the Indian economy. As I mentioned earlier, the Indian economy is expected to be one of the fastest growing large economies in the world over the coming decades. And as an investor based in the US, I want exposure to that growth. And with this fund, I get the exposure that I want without having to constantly look at my portfolio and constantly buying and selling different Indian-based companies. If we look at all of the India-based ETFs that are available to US-based investors, the iShares India 50 ETF has a 5-year return of 69.94%, which is higher than all other ETFs on this list except for one. Only the Columbia India Consumer ETF has a higher 5-year return at 74.06%. But the problem with that fund is that it's not as well diversified as the iShares India 50 ETF, and for that reason, my choice to get exposure to the Indian economy and to the Indian stock market is through the iShares India 50 ETF. In terms of my final thoughts, I think that the iShares India 50 ETF is a fund that you should strongly consider if you are bullish on India and the Indian economy. But as always, please do your own research and please do your own due diligence. This video is intended to be a part of that research and a part of that due diligence. Personally, I was looking for a way to get well-diversified exposure to quality Indian companies, and for me, and based on my research, this is the best way. Well, with that, ladies and gentlemen, I'm going to call it a video. Thank you all for watching, and please remember to give this video a big thumbs up, and please remember to subscribe to my YouTube channel, The Beat of Business. Thank you all for watching. I will see you all very, very soon.